Hello friends and welcome to Nikos Blended Investing. Welcome to another No Frills episode. I'm recording here from Scotland and I'm just drinking a cup of chamomile because it's quite cold. And I've got a Grey's honeycomb caramel snack here as well. And I'm just going to take through how we're doing. So I just finished another full day with a client, a retail client today. Doing some web development, and I've just finished up a financial podcast on my Nikos show with V the Guerrilla Economist. So anyway, our biggest 6 positions here, I'm quite happy with. As we can see, GSK is coming close to profit in terms of just raw profit. Obviously, we've made about 6% in dividends over the last year. In GSK, we have quarterly dividend get payouts, so we're looking forward to that in January. And also BMW is approaching the 100 mark, which will be the second time in history, I believe. They were over 100 a few years ago, but I'm pretty bullish that we're going to reach that. And in terms of price target for BMW, can't really say. I see myself as an owner of BMW, and I don't really want to sell that stock. I regret selling Greg's. I regret selling about 2/3 of my Greg's position, and then buying back in at an all-time high because I got thrown at the market a little bit out of fear last week. As we all know, the markets have been a bit volatile. So today we're up 1.3% at time of speaking, and that'll bring us back in the profit for the year. So it's been a tough January. Well, the third month in the red. I really apologise for that, call bears, but not too much more I can really do about that. We're also approaching match for 6.5, which I'm not happy about, but it is what it is. I think we're quite well set up for the rest of the year anyway. We're quite well hedged. We've got 11% cash, and a lot of our growth stocks, I believe, have been sold off more fairly than we've seen, and obviously Nasdaq has been held high by the large cap stocks, which are kind of makes the Nasdaq not so realistic when it comes to comparing it with our growth stocks. So anyway, we also discovered this fantastic website called Bullsheet, and I'm just blown away by what it does, and it basically breaks down my sectors here. So if we go to the dashboard, we can see that my portfolio breakdown. At the moment, we've only got 4% of crypto. Some people say you should have 10% in crypto, but I'm not really convinced that we've reached the bottom of the crypto market, so I'm going to keep that percentage there. People ask me sometimes, why is it time to buy more crypto? And I'm like, no, it's not. Maybe wait for another 10% or 20% or 30% drop. Anyway, we can see here this is the breakdown, and in terms of the way the portfolio works during the day is that we have a large percentage of our stock within the US, the German markets and the UK markets, and then later on during the day we have the US markets. And it's quite interesting that my this Bullsheet seems to think that 40% of my assets are low risk. I think that's fair. I'm actually quite happy with that allocation because it gives the investor that's sort of maybe not so young, maybe in the 30s, 40s. I think that's the sweet spot for this portfolio. If you're wanting those 100% gains a year, I'm not really the popular investor that you want to. I think you'd be maybe disappointed with the performance because I'm not aiming for that percentage. I'm aiming for that 12 to 15% a year regular, and I always try to make people feel I like to outperform what the portfolio is designed to give, have a large probability, so that people come copy me, they want to copy me, they will be pleasantly surprised. Versus, I just do not want people to come and copy me for those. I could probably put some marketing stats up saying I've gained this percentage since the beginning of time, but I don't really want that. I don't think it's fair, even to the detriment of the amount of copiers. I would rather people just copy me because they like my ethos and my investment philosophy, and maybe be pleasantly survive. So that's why I put that 12 to 15% kind of low target, which I don't really see many other people saying this. It's just who I am really. I don't want people to be disappointed. I can't deal with people losing money. So that's why my pin post that I'll eventually put back up there says that kind of low percentage. But it's pretty high because like hedge funds will be making 7% a year. Sometimes they'll be happy with that. If you go to some of these large investment sites, they'll be sort of promising you that 5 or 6%, and I'm promising you maybe 12%. So I promise is a strong word because there's no guarantees. So anyway, today we're good, doing thematic. I was looking at maybe getting a little bit more of that price too, but I was just not convinced that the crypto was going to fall down more. This Whiting Petroleum now is at 100% profit. So if I just go to the I don't really show these stats very much because they don't not showing the large percentage, but for initial investments. But I tend to focus on the largest investments I have. But this one I've held for about a year now, and it's sort of, for me, it's like a leverage long on oil, but it's a bit more, doesn't really behave the same as oil. But absolutely loving that performance there. So let's go back to the bull sheet. And so like box like small caps doing well today. So there's been a big bounce back in China, which we're happy about. And yeah, so we've got all that. Crefin, that is quite surprising, that big drop today when we had the rest of the Chinese market doing quite well. Very disappointing there. TUI, that's another disappointment today. Talking about reducing the restrictions for testing and things like that in the UK. Sorry, I'm just talking really fast today because I'm just trying to cram this in a busy schedule that I have. I can barely keep up to date with most of my positions, and maybe not all of them anyway. So it's good to see that races come back in there. I think that's quite a good hedge against inflation, because it's almost like art. People are treating Ferraris like artwork. The value is just preserved for some reason. So that's, even though it's got a PE of like 50 or 40, that's why I'm back into the race stock there. Well, actually, first time, but yeah, it did quite well in the larger sell-off this week. In general, car stocks have done quite well this week. Okay, so this is quite new to me, bull sheet, so I'm still kind of trying to figure out how it works and what it does. So as you can see there, we have a dividend yield of 1%. That's quite low. I think rebalancing the portfolio going in the future, I might try and get that up to maybe 2%, but that's quite hard to do for a whole portfolio, because a lot of our stocks are in the growth stocks. You see we have our 16%. It says 16% cash there. I don't know why it says that, because on eToro it says, I guess that's, I don't know why, because like if I go to my portfolio, it says 11% cash. So I think got some bugs to work out there, and we can see that's really, really good. That this is quite helpful as well, because you can go in there before the market. But to be honest, pre-market, the volumes are so low, it's not a very good indication what's going to happen, and you can pretty much, I think, almost safely ignore the pre-market. It's kind of a waste of time. This is the crypto breakdown that we have here. So yeah, I'm not really staking anything, am I? Maybe I am. So we have this Matic, which is a sort of layer 0, helps Ethereum. I think an Ethereum won't be ready. Ethereum 2.0 won't be ready until like a year's time. So Matic, I think, is a good play. But yeah, I'm not too big onto the crypto here. So don't really. I just sort of have it in as that little 4 or 5% there. And I think that's a way that you can see the country breakdown. Or maybe you can see the JSK calendar. Got the earnings coming in next week for our copiers, and I've got some Chinese ones coming in. I'm just trying to find this other thing. What's this? What does this do? I'm not copying anyone. Yeah, of course I'm not. Dip sheet. That's pretty funny. Games Workshop down 10%, and they've got this thing called Bull. I guess this is things that are going up quickly, right? So where do I go to? Oh, this is interesting. This is like popular investor feed. Insider screener. What does that do? Okay, I'm being a bit cheap. I'm not on this one. Train line, screen results. Where's the country breakdown? I had this thing that showed you your countries, which is quite interesting. Here we go. So yeah, we're actually 22% invested into the US, 15% into Germany, and United Kingdom 15%. And this is a China exposure. So I think that's a good balance, pretty geographically distributed, but probably a lot more focused on the UK and Germany than a lot of other popular investors, which is fine. I like to have a little offer a bit of diversification there. Okay, so that's pretty much it. That's all I want to talk about today. Thanks so much for watching. We're just going to stay steady and keep the strategy going for this year, and we'll be back in the green tomorrow, and we'll see where we go. Thanks so much for watching, guys. Bye bye.